When you combine your unadjusted trial balance and the adjustments from your accountant, it's called an adjusted trial balance. This document is the holy grail for bookkeepers. It will tell you what you need to know about your ledger account, and without it, you wouldn't be able to get to the final step in the accounting cycle, the financial reports. Before we get to that, though, listen to a friend with a little advice about working with an adjusted trial balance.
For people just starting out with bookkeeping, that you'll hear the term trial balance, unadjusted trial balance, adjusted trial balance, adjusting journal entries. You know, what the heck is all of that? Basically, what's happening here is as you're entering all your transactions and reconciling everything all year long, let's say there's an unadjusted trial balance at the end of the year. It's basically the accumulation of all your work, but it's listing all the accounts on the chart of accounts with all the balances at year end. So basically the summary, the ending totals of all your work. Then an accountant, maybe the CPA, the CFO of the nonprofit or whoever it is going to make some adjustments to that. And usually those adjustments are some things that are non-cash, meaning like depreciation, amortization, maybe there's some accruals they need to do. It could be annually, like I'm talking about, but it could also be quarterly or monthly. So basically somebody's going to come in and draft journal entries, adjusting journal entries to get to the adjusted trial balance. So it starts with unadjusted plus journal entries equals adjusted trial balance. So they're just going to make these final last tweaks to the financials so that when they do run the profit and loss and balance sheet, it's you know, handling depreciation and all these other things that wouldn't be coming through a bank feed. So that's basically it. You're going to present the unadjusted trial balance to the tax preparer or the CPA. They're going to do some adjusting journal entries, and then you have an adjusted trial balance with the final numbers. So that's basically all it is. So my first experience working with a trial balance was actually in QuickBooks Online. When you are logged in as an accountant user, and bookkeepers are accountant users, there is a feature in the accountant tools where it's called Book to Tax. And basically, this is where the unadjusted trial balance appears. There's actually a column with all the ending numbers at the end, let's say the end of the year. And then the next column is where you would enter the adjusting journal entries. And in QuickBooks Online, if you enter a journal entry, you check a box that says adjusting, and basically it loads it to that adjusted trial balance feature. And basically the beginning unadjusted trial balance plus whatever those entries were becomes the adjusted trial balance. And that's basically the numbers that are going to get pushed over to a tax return. And in QuickBooks Online, that connects directly to ProConnect Tax Online. So it's all done in QBO. And I think it was a great experience seeing a trial balance for the first time because it's all connected right there. So if you are in QuickBooks Online accountant and you're logged into a client, take a look in the accountant tools and you'll see that feature right there, and you can kind of get a feel for what a trial balance, the adjustment, and the actual adjusted trial balance look like. So you may be wondering what your role as a bookkeeper is in preparing that initial unadjusted trial balance. And really, it's basically accumulation of all your work. You want to get, you know, all the transactions in, clear bank feeds, reconcile, make sure everything is correct. You know, bank statements match the books, loan balances match the books. You're reconciling everything out on the balance sheet. All those numbers automatically appear in the unadjusted trial balance in QuickBooks Online. So an unadjusted trial balance is the fruits of your labors. It's already there. And then again, somebody, tax preparer or a CPA, somebody like that is going to look at those numbers, make their adjusting journal entries, and turn that into the adjusted trial balance, which in that case would be ready for tax prep. So you might be thinking, what should I be looking for in an adjusted trial balance? Well, I do need to say, it really depends on your scope of work as a bookkeeper. Generally, bookkeepers are handing the books over to the accountant who's doing those adjustments. and you're kind of out of the picture at that point. But maybe you're curious, maybe you want to see what's the result of their work. You could go into the adjusted trial balance area in the accountant's tools and actually see what the accountant did or whoever made those adjustments. You might be looking for things like depreciation. It would be an expense, depreciation expense, but also reducing the value of that asset on the balance sheet. Those accruals like that, maybe they're accruing payroll at year end. You might see a payroll accrual adjustment. So again, probably not in a startup bookkeeper scope of work, but it's very important to know what it is and what's going on using the trial balance tool.